Okay, so now we're going to turn it over to some of the blockchain infrastructure that we're seeing behind some of the projects that we have discussed today. So this is going to be a very exciting panel discussion. We have an absolutely awesome lineup. I'm going to hand it over to our moderator now. We have Jeff Hasselman, the Global Head of Web3 at AWS. And so let's give a big round of applause to Jeff, first of all, for moderating the panel. Great to have you.
Hello, everybody. Thank you to DGH for everything today. One, I need to apologize. I'm sorry, I'm not the Jeff you're expecting from Amazon. So my apologies on that. But I am the Jeff taking us from Web 2 to Web 3. So hopefully that helps with this audience. So we'll see. As we get set up here, let's call out, I'll bring up my other panelists as these chairs come in. Let's bring up Brian Brooks, Greg Lang, Robert Grant, DH Kim, and I believe, I don't see Diego. So we'll make this work. So actually, I'll take this end spot right here. All right, so we're going to go on a fun little voyage. Maybe just by way of introduction, I've been leading Web3 at AWS for about 5.5 years. A lot of it was as a night job. One of the cool things about Amazon is if you see a blank page, be the author, not the reader. We are a book company, so I like to use that little analogy as far as how we look at it. So working very closely with a lot of the people in the audience, helping developers build, looking at Web3, what can we do to help take it to the next level, anything we can do from a tooling standpoint, helping with infrastructure, go-to-market, and telling their story with visibility. So the one thing that we like to do is empower builders to redefine the internet. So with that, I'm gonna let my panelists, we'll go right on down the line here, introduce yourself, tell a little bit about your company, and we'll go from there.
Great, well, thanks. I am Brian Brooks. I am a 49% resident of Los Angeles. People have asked me where I live, and I never admit to actually living here as much as I do, so pleasure to be seen on a stage here. I run a company called Bitfury Group, which was the original industrial scale Bitcoin miner, and in the mid-2000s, the company spun off 6 or 7 other kind of crypto adjacencies, some of which you might call infrastructure, so excited to talk about that. I did a little turn running a regulatory agency for a period of time, so I tried to establish some rule sets so that all of us could exist and thrive, and we'll see how long that lasts. So thanks for having me.
Hey guys. This thing on? Okay, cool. So I'm Greg Lang. I'm the CXO, that's a lowercase x typically, of Rivet. The role that I have with our company, which builds blockchain infrastructure, that is simple and easy to access for developers to catalyze the development of Web3, very much along the lines of what AWS did for Web 2, is sort of the end goal of the project that we're trying to achieve with that. And yeah, I also kind of feel like the very first box in the Galaxy Brain meme right up here, because these guys are kind of distinguished compared to me, so I feel like a new kid on the block.
Nice pun.
Yeah. My name is Robert Grant, and I'm the CEO of Crown Sterling, founder as well, and I'm also the founder of Strathspey Crown Holdings, which is an investment group. We have about 17 companies in our holding and portfolio, and Crown Sterling in particular is focused on data sovereignty for individuals. And we make a unique encryption called one-time pad, and we're the first to place it on blockchain. For those of you who know the cryptography, one-time pad is the nuclear code version of encryption. We made it practical and was able to patent this as well. And we also have a novel compression technology, which is based on geometry.
Hi, I'm DH Kim. I'm the founder and CEO of Finhaven. Finhaven Technology has built a capital market infrastructure. We're based in Vancouver, Canada, and our subsidiary, Finhaven Capital, went through a very lengthy regulatory authorization process and built a secure token dealer, an authorized marketplace, and clearing agency on our Finhaven investment platform that we built. We also have a Finhaven gateway business that is basically interaction with the crypto assets and digital securities.
Very cool. So let's kind of dig in here. I'll start with you, Robert, on this question. I want everyone's perspective on this, but what has been the biggest advancement in blockchain infrastructure in 2022, in your opinion?
It's a really good question. I would say that probably the biggest advancement that I can think of is the advent now of quantum-resistant technologies that are starting to come into play. I think it's still not perfectly well known, but the White House just announced several months ago that every branch of the US government needs to be on quantum-resistant encryption, and yet the entire blockchain industry is still stuck with the same standard type of encryption technology, which is either elliptic curve or derivations of that elliptic curve technology. I think all of it's going to have to change very soon. And I think blockchain now has some options that are starting to emerge, which is exciting to see. I also think that being able to distribute keys across nodes and shard those keys, right, is also going to be a major advance in blockchain technology.
Brian, how about your take on that?
Well, you know, I think first of all we have to define some terms. So when you talk about blockchain infrastructure, you know, what are we really talking about? And I could make a bunch of different arguments. Like I was gonna say, maybe the Ethereum merge was the most important change in infrastructure, because you think about layer ones as the infrastructure on which all of these apps are built. I would say that's a good candidate. Or you might say the actual rollout, like the real rollout of Lightning, which people have been talking about for years, but now it's here and Bitcoin is doing what Bitcoin was designed to do. That would be pretty big. For my money, just kind of sitting where I'm sitting, one of the things I would say is that, you know, I on the one hand, I am pro-crypto. On the other hand, I do believe there's a unique role for Bitcoin in the ecosystem. It's sort of the foundation asset for everything else that exists in the space, certainly for DeFi. And what I was going to say about Bitcoin is, if Bitcoin's going to survive the ESG assault, it's going to need to make a better case for you know, why it is consistent with kind of sustainability principles. And so on that, my dark horse vote for infrastructure development of the year is kind of the mass scaling of immersion cooling technology, which takes an enormous amount of energy out of the operation of mining data centers. People don't pay attention to that, but it's a really big deal in terms of the sustainability of securing the Bitcoin blockchain.
Cool answer. DH, I'll go to you.
You know, my business is focused on the regulations, how we can bring about real innovations based on our pre-existing life. When I say pre-existing life, I'm basically using that expression in contrast with the crypto-native life. So from that perspective, I think this year I was happy to see kind of deeper discussion around the blockchain middleware, because you know, essentially in layer one we have transaction finalities, but there are multiple regulatory and legal compliance that we have to consider for those transactions to be finalized in layer one.
And Greg?
It's a very good point. All good points, by the way, by the panel, although I'm partial to the commercial infrastructure and dark horse that you mentioned. One that did not get mentioned and that people should really hear about, just to blow Rivet's horn a little bit here, we released the Cardinal EVM open source software earlier this year. It reduced the operating cost of our system significantly, increased its stability significantly, and made it cleaner for developers to adapt you know, dramatically as well. So, and I think this isn't just us. I think this is a trend that's happening all over the industry, and I think that what we're starting to see is, you know, capacity itself preparing to be global scale. And whether that's happening in law or in regulation or in you know, any other capacity that, you know, cryptography, that it's relevant, we're starting to see people mature up to the idea that this is a long haul project that's going to take effort, but people are starting to show some reward for their time on the shovel. So
very, very cool. So Greg, I'll stay with you on this because, and Brian brought up the merge, and a lot of people don't realize the merge is just one of 5 steps. I think everyone thought once the merge happened, that's it. But now you're on to the surge, and we keep moving around from that standpoint.
And the urge.
Yeah, and the urge. We got the purge. We've got
and the purge.
I feel like there's like an alliteration law we need to get going here.
Finally,
because
acceptance.
Splurge. So with that, from a Rivet standpoint, how did you look going? Obviously, you spent a lot of time in the Ethereum now in that ecosystem. Just curious how Rivet's looking at that and how it's looking at the next phases as we move forward.
Well, Rivet looks at things fundamentally from a first principles perspective all the time, right? So what we're looking at isn't, you know, what's coming down the pike. It's what kinds of regular processes do we need to build in so that we can maintain forward progress on the things we're working towards, expanding to layer 2s, getting ready to support some of these new amazing chains that are coming out in sectors that haven't even been touched by blockchain yet. We're doing all of the, the necessary homework to make sure that we're not undermining ourselves by letting the network get outside of our support understanding and letting our software get out of date. We're always doing that kind of stuff. We'll keep doing that kind of stuff, and it doesn't feel any different to us, I guess. I mean, the merge itself was an incredible piece of engineering, right? Never, probably before or ever since, will we see something that was that complex succeed without falling over, right?
Yeah, I think that was the best compliment of it, that we didn't have an issue.
No.
For sure. So, Brian, I'll turn to you. You've won a distinguished career helping build this world, as just the number of stops that you've had. You've been in your role for about a year now. I'm just curious if there's anything that you've learned in this last year that's maybe surprised you or maybe changed your mind of the longer vision as to where things are going, without giving away too much of your roadmap, but just curious.
I mean, so many things have surprised me, I gotta say. So here's what I would say. I am worried about Bitcoin. And I'll tell you why I'm worried about Bitcoin. So it's not because of the price of the asset, but if you look at what's going on with the underlying activity and technologies and economics that have to exist for the asset to exist, there's a lot of very, very weird and difficult news. So let's start with the market for the underlying hardware technologies that are necessary to mine Bitcoin. And by the way, I've been an advocate of not using that phrase, but to, let's say, secure the Bitcoin blockchain. The price of hardware in this space has fallen about 85% in the last 9 months, which means that it's very, very difficult for people to make money building that technology and innovating in that technology. So when I started at Bitfury, just as a way to think about this, the typical price of a Bitcoin server was around $80 or $85 a terahash. So, for a certain amount of compute power, it costs you $85. And that same equipment in the box, factory sealed, is now selling for, depending on how deep in the black market you're willing to go, $10 to $15 a terahash. So anytime prices crash that far in underlying infrastructure, it's a very dangerous thing because nobody will invest in it. It's sort of the reason why you have housing shortages when you have rent control. If prices fall below market incentives, you simply won't engage in the activity. So can we expect that that equipment will be available 2 years from now? Hard to say. Then you look at mining itself. The number of major publicly traded Bitcoin miners that are either in bankruptcy or on the cusp of bankruptcy is insanely high, much higher than you realize, right? So you read about Core Scientific and Argo and a handful of others, but when you look at the leverage of multiple other public miners, if you just read the 10Ks and understand that their debt service exceeds their monthly revenue, it's only a question of runway before they hit the wall, And so in a world where 8 or 10 of the biggest 20 Bitcoin miners are going to be out of business as we know them, who's going to do the work of creating the decentralized network validation structure that was Satoshi's dream? This is what crypto's all about, is real decentralized networks powered by tokens. But if the core network, if the largest network is confronting these kinds of problems, in a world where venture capital is constrained and where very little credit's available, these are big problems. So that's the thing that I'm really worried about. Now, at Bitfury, there's a lot of great news, which is that this company was smart enough to diversify away from mining, 7 or 8 years ago, and we have multiple other high-growth investments that are all going great. So we're going to be okay as a company. We're doing a little bit of internal rejiggering and restructuring and selling, but we're going to be fine. But on the other hand, the Bitcoin blockchain might or might not be fine, depending on the underlying economics of the inputs. So I really worry about that, and I think we don't spend enough time at these conferences talking about that.
Yeah, great points, and something for maybe drinks later on to go a little bit deeper on that. Robert, I'll turn to you with your background, and again, distinguished, between you, Brian, I'm kind of with Greg on this. I feel like, wow, looking up at some royalty here as far as where this is at. So Robert, with that, I'd like you to kind of explain to the audience how they can reclaim the value of their data. And with that, I'd also like, because it's all about builders and what the opportunity is for people building in this space, to kind of see where they might be inspired to build something over the next 5-10 years.
Well, our head of government affairs, who's been with me for 10 years, is running for Congress right now in Southern California. His name's Scott Baugh. He's running against Katie Porter. And I asked him, I said, what kind of tools do you use to find out about your constituency? And he showed me this app. And the app lists every single voting age person in California. Every single one. So I thought, oh, let me look myself up. 56 pages just on me. Whoa. 56 pages just on me. Now, I don't think I'm unique, and I didn't fill out any surveys, and yet this knew exactly my stance politically on our relationship with China. It knew exactly my stance politically on abortion. It knew exactly, and down to the nuance level, that I am personally, okay with abortion, but not if it's late-stage pregnancy. It knew that level of detail. Where did all this data come from? My messaging apps, my social media. So now, as a candidate, the candidate can know exactly what to say to me to placate my subconscious as well as conscious desires. That's messed up. So from my perspective, we all need to start realizing that our digital lives have become an extension of who we are. So therefore, we must be able to recognize that data is the intangible personal property of the original producer, not of other companies who are basically taking it. And when we start using products that we think are free, actually we start to have to realize that we're the product. So how is it that we can now change this model so that it comes back to something that's more about individual sovereignty, about individuation of people? Because that's the reason why government exists. Government exists, in my opinion, because it derives its just powers, as it says in the Declaration of Independence, from the consent of the governed. Well, I think the way this is going to happen is for us, each of us have to become aware of the fact that our data is highly valuable now. And that we ourselves could actually monetize it, and maybe it's the first opportunity we have at a sustainable, universal basic income for people. Now, when you start looking at the numbers, if Facebook were to write a check this last year, McKinsey estimates that they would have to write to Americans of like a certain demographic something like $2,400 a year. And it was $1,300 the year before, and it was $600 the year before that. So when we start realizing the value of this data, is there a possibility that there will be a marketplace for individuals and then also collectively to put that data into? And how can blockchain developers start making infrastructure that would allow people to securely create their own mechanism of whether NFT or blockchain technology that will then allow them to be able to market that? And if you think about it, money has required banks to be secure. And we think about property and assets need fences and walls. Data, the world's most valuable asset today, by far, it's exceeded every natural resource on the planet now, needs encryption. It needs secure storage methods. And we need to start really placing value on those things that protect those assets. That actually, it's not just about some asset or some property, it's who you are.
No, you're touching on some really, really important things that in my role, I see a lot of companies that are trying to go into that segment and try to tackle that problem and so forth. One thing you hinted on at the end there is the security aspect of it. I think in this ecosystem, in this world, we've all talked about security, but we haven't actually done it to the level that it needs to be done. And I think you're starting to see, at least the investors that I work very closely with the Web3 native investors as far as what they're looking at, and the companies. I see the two girls in a hoodie and what they're working on. It's one of those things where security is starting to come up more and more as to how it ties to that world.
And can I just say this, that deep fake is a real thing. Like, I had a company pitch to me recently, they want to make a deep fake of me.
Right.
So that they can go on my personal website, and then my grandkids and everything could see what I would answer, what I would say as if I was on a panel right here. And all the AI comes together to come out and output this incredible answer that's extremely consistent with what I would actually say. But think about what that means, because doesn't that really start to threaten who we are?
Yeah. And you can be in 4 places at once having a conversation.
Hey, multiverse.
Exactly. Hey, DH, I'll turn to you. With Finhaven, you're creating capital market infrastructure. Can you kind of walk us through that journey with the company and where you're at today?
Sure. So, when we talk about innovation with blockchain technology, users of this technology should have some real feeling there is an innovation, that it makes things easier for my life. In capital markets, in the 1980s, we used to have a transaction plus 8 days or 10 days in some countries. So you buy and sell your securities, essentially you get your settlement of your transactions in 10 days. Surprisingly, even some of the developed economies up until a couple of years ago, they had T+3. We have had T+2 for roughly about 20 years, but it's been T+2. So that aspect is that T+2 creates multiple issues. There's multiple intermediaries in the middle, going through the clearance process. Because of that, in fact, you receive your dividends and interest not on time. It takes time for you to receive the funds. If you're an issuer of securities and you want to have your shareholders list, you got to wait days, and you still have to pay to get your own shareholders list. So there's multiple inefficiencies in capital markets. Now, with blockchain technology, the fundamental foundation of innovation comes from P2P transaction. However, these P2P transactions has another issue of custody. So in fact, even in the crypto native world, we're pulled into the traditional notion of custody or traditional regulation of custody issues, and starts creating lots of inefficiency even in crypto world. And securities world is even worse. So we focused on the P2P transaction, make that P2P transaction true in our capital market infrastructure. So that was the key. And how we make it non-custodial wallet, but still there is an investor protection when there's, when an investor loses private key. That was another thing that we focused on in terms of solving this problem, building new capital market infrastructure with the real innovation to capital markets. Now, in terms of P3, I think we're facing another challenge there because of the custody issue and whether we can really have a P2P transactions. I think that will be the key for Web3 coming to us relating to the traditional capital markets.
Thanks for that answer. I'm going to shift gears a little bit, and the word interoperability has become a big word, and I'm really curious on each of your takes. I'll start with you on this, Greg. When you think of interoperability, what blockchain infrastructure, what infrastructure in general do we need for greater adoption for that to take place?
It's a great question because it dovetails nicely with the one that I was imagining would also be relevant to some of the places we were before, where you get into some of the societal issues, right? I think above all, we need to raise our eyes to the horizon and have a bit of calm about how we handle infrastructure. It needs to be boring. It needs to be slow. It needs to be deliberate. Our process needs to be confident as we go, right? We need to keep infrastructure unsexy, because if we start to sexify it, we start to politicize it, we end up with this question of interoperability, when in reality what we're trying to do with Rivet is build a stable platform of code, right? Not a platform in the traditional sense, but a code base that any developer can go fork and say, hey, I want this to work on my layer 2 that I just invented to run on my proof of mileage mining system I built into the axle of my semi-trucks or whatever, right? We don't know what they're going to build. So we need to keep it neutral and we need to keep it efficient, and that the best thing we can do for them is to build it simple and build it well, like we've been doing for the last, ever since code was invented, and just keep iterating. Like that is what engineers need to be doing right now, because that's the best thing we can do for the future.
Robert, I'll turn to you.
Sure. I think interoperability has been a huge issue for the last, at least from a buzzword perspective, but I think, as Greg just said, I think stability trumps it actually at this stage, right? And I think we've seen a lot of stories, obviously some of the issues we all well know around Solana, et cetera, right? And I think there's a degree of a desire, which is great because all programmers, developers want to go in this direction. I think, companies like Polkadot have actually done a really good job on it, and Cardano, et cetera. There's a bunch that I can basically point to. But I think stability has got to be the most critical aspect. And I think speed of the transactions. And I think in general, I think the place that I'd really like to see everything go, if you really want to have an impact on planet Earth, if you really care about that, then I think it's got to come down to efficient platforms infrastructure like compression technologies that could actually go beyond where we are right now. So zip files, you know, you get about a 30% compression ratio. That's not very much. And I'm really excited about where the compression technologies are going from a mathematical compression perspective that can actually handle all data, including all already compressed files. 20% of the Earth's energy right now is going to data storage. It's only increasing. If we could bend the curve on that and turn that into 10%, imagine what that could mean. Right, and that's what I'm liking to see, because I think interoperability, efficiency, speed, all these things, you know, mass energy equivalence in physics, and you know, mass energy as well as mass energy information equivalence. So information and compression, information theory technologies, I think, are going to be hugely important to blockchain infrastructure going forward.
Cool. Brian, do you have any thoughts on this?
Yeah, well, I'll give you a different perspective. So there's a part of me which feels like, you know, layer 1 protocols don't actually need to be interoperable and maybe shouldn't be interoperable. They're being built different ways for different purposes. What definitely needs to be interoperable for the crypto ecosystem to function are stablecoins. And the way I think about it is, you know, if stablecoins are the blockchain native unit of exchange and they have to allow you to stay on chain for any kind of value transmission, then what's important are things like, you know, USDC's multi-chain connectivity project, where they've connected up 5 or 6 and they have a goal of, you know, much more than that. But as long as I'm able to spend across platforms, it's not clear to me that the platforms themselves need to connect with each other. You know, it's sort of like my whole theory about tokens generally is the magic of their fungibility. It's the fact that unlike your Starbucks points, you know, which can only be used at Starbucks, you can use your USDC tokens anywhere, and with Bitcoin, you can sell it for some other asset if a trading pair is available on your exchange. So what matters is the intermediary technology has to be interoperable, and I think that's stable coins. For everything else, I think it's okay. The point is to have an economy across chain, and the thing that creates the economy is the unit of exchange.
Thanks for that.
So stable coins become a bridge.
Exactly. That's why I've always thought about it.
So DH, I'll turn to you. You recently made an announcement, a CBDC announcement. Can you kind of elaborate what that was and what the details are on that?
Sure. Thank you for the question. Currently, many, over 100 governments, countries, they are working on their own CBDC projects. They engage a certain IT company, and then they build proof of concept and beyond. It creates a lot of issues. Number one, it's very resource intensive. And secondly, when we have CBDCs, we need to have a very good cross-border settlement system. And at the same time, it involves the security settlement, you know, in terms of cross-border settlement of securities. So here we're embarking on a new journey, creating a new infrastructure, not controlled by certain countries' interests or policies, but any country in the world can join this infrastructure, build their own CBDCs, and create the infrastructure of cross-border settlements of CBDCs and securities. I think this will be an extremely important matter if you imagine a better world with the better access to money to those in need, not just the people, but even countries. So that is the new projects that we are starting. With regards to your interoperability question, actually, it is related because I keep thinking about CBDC's interoperability, because every sovereign jurisdictions, they want to have their own protocol, and if they are large economies, they probably want to dictate the protocols of the CBDCs. So I think in the long run, I think the interoperability will be enhanced by focusing on the protocol middleware, and that's another aspect that we are deeply looking into.
Thanks. Robert, I'll turn to you on the next question. So with Strateske Crown, your website has a great kind of, it lays out how you look at it, what your vision is and so forth. One is high barrier entry to various industries. I'm curious today what you would call those, and then maybe when we get back together in 2030, what that might look like.
You
and
know,
that to inspire all those builders out there too.
So the reason why I kind of, ended up terming it that way was because I believe that the answers to the most complex problems must be simple. And society generally, and government in particular, tends to layer on greater and greater complexity on top of complex problems. And we think that the most complex problems need the most complex answers. Actually, the opposite is the only way that it can be. I spent a couple of weeks on 2 times with Richard Branson on his island, and I asked him, I said, how do you choose which companies you go into? He had like 50 companies, and he was like licensing his name out. It's almost like a Trump model in a way, except he retains a huge equity position also when he does this. And they pick really good CEOs and all. And he said, I pick industries with low barriers to entry from a regulation perspective. And then I focus on an industry where all the companies are going away from the customers. They're focused on earnings per share growth. They're focused on all the things that might actually diminish the value of the product offering to the consumer. And I said, so then what do you do? He says, easy, I just go the opposite direction. and I thought to myself, geez, that's kind of cool. So then I decided when I was building my portfolio, and some of it through acquisition, some of it through our own founding of companies, was I wanted to go after companies that would do the same thing, focus on the customer, but do it in the most complex environments. So what are the most complex industries? Healthcare, right? Finance, energy, right? And so as you look at those industries that are super duper like regulated, the reason they became regulated is because the incumbents said, let's build up barriers to entry. And that's how it works, guys. We have a corrupt government. Sorry, I just said this. I gave this speech at the United Nations about 4 weeks ago. And I said it, I was like waiting to see how the other shoe would drop and see people say, no, no, no. And nobody disagreed with me, which was freaking me out because I was like, so why don't we do something about it? And I'm not saying it's illegal corruption, it's totally legal corruption. I could give you story after story about lobbying stuff, and the truth is I've also participated in lobbying in Washington because if you're not on the table, you're on the freaking menu. That's the way it works in industry. So from my perspective, the problem we have right now in the blockchain space is opacity, right? We have complete opacification. It's opaque as to how you proceed. What do? You don't even know. You go talk to an attorney. How do I set up a coin, right? And there's easy ways to do it that you can actually do. Start with equity, by the way. Start with equity. Finance your company with equity first. It's much easier, right? Because that's going to make it much easier for you to pass Howey tests. But the thing is people don't really speak about this stuff. In law firms, et cetera, they're like so hedging of their bets. You only get memorandums. You're not actually getting opinions. It makes it very risky for big investors to come in to this space. And I think that there's also some traps that we're going to fall into that I've seen in healthcare, that I've seen in energy. So for example, if you're now on a platform that's doing both securities and commodities, right? You're likely to be regulated as if everything is a security. That's the way it works in healthcare too. You have reimbursed products that are government insured products, and you have cash pay products that don't take any government reimbursement. But guess what? The cash pay products end up getting regulated as if they are reimbursed. Once you take money from the government, this is why Bank of America, this is why JP Morgan, all those companies after the Great Recession got TARP funding, were like, let's return this right away. Because as soon as you take money from the government, you're owned by the government. That means you've got to start putting in place all kinds of rules and regulations that really inhibit your ability to actually provide true value to your customer. So I think that what we need to do as an industry is come together and start really getting involved in the lobbying, not because I believe it's a good approach. I hate lobbying. It should all be banned. But right now, there's also a lack of knowledge in Washington. The crypto caucus needs to be strong. And that's an area that I've been getting more and more involved in, because I was already involved in from a government perspective for many years now. But I think we are way behind on this, way behind. And we really need to get ahead of the 8 ball on this one, because it could really impact us negatively. And I think another thing that's going to have a big negative impact is what Apple's doing right now. What they just announced yesterday on their treatment of looking at marketplaces and NFTs and 30% cuts on everything, that's going to really squelch innovation, and I think it's a bad move by Apple.
Great point. So Brian, I'll turn to you. Bitfury has a number of different products, and one, you're spending some time around AI. And I'm curious how you're looking at AI and how that is playing into where this world will go when you think about blockchain.
Yeah, well, I mean, look, we got into AI not because it was a blockchain business, but because we were one of the biggest Bitcoin mining chip manufacturers, and once we had chip talent, the question was, what are all the ways you can deploy that? But I will say, you know, if you think about one of the most interesting things that's gone on in crypto in a little while, and this is going to circle back to Robert's point about the government and its sort of incumbency protection bias.
That's a nice way of saying that, by the way.
Exactly. See, when you're in Washington, you become the master of the euphemism.
Right.
Yes, so for like we could do a game show where you could tell me like a dirty word and I could translate it into a euphemism.
That sounds like fun.
Like I could do this with George Carlin.
We should do a round of that.
Totally.
That sounds like
We
fun.
totally should. We'll do that at the end.
That's how we're going to close.
Perfect.
Totally.
Bullshit, irrational exuberance.
Yeah.
I'm already doing it.
I love it.
Anyway, one of the most interesting things that was going on in crypto for the longest time were these prediction markets, you know? And so people remember Augur as a really cool project a few years ago, and it had 5 or 6 competitors. They all eventually got shut down by various regulators. You wake up this morning in the middle of a hotly contested election, super important election, lots of very, very close races all around the country. And I don't know about you guys, but you know, there's no point in looking at Real Clear Politics. You want to look at Predicted, right? Mm-hmm. Predicted is where people put their money down, and so it matters. They're voting with their pocketbooks, so those are real votes. Cost them something to make the vote. And Predicted, over the last several cycles, been far more predictive than any polls. So naturally, the government steps in to do what? To kill it. And when asked why the CFTC rescinded their letter that 7 years ago had authorized Predicted to operate, they said because they weren't complying with the terms of the letter. So sort of a self-referential, right? So the point is, some of those things
Is that like circle jerk?
Self-referential. I feel like Kafka would be proud.
Self-referential.
Yes.
Self-referential. I can do this all day long. You can give me a dirty word, I will give you a euphemism. It's what I do.
I prefer being on the dirty word side.
Exactly. Well, but this is the ecosystem. You see, you hire me to give you the euphemism.
I feel like Johnny Carson right now. Like.
Yeah. Anyway, look, the point of AI.
Who's on first?
Yeah. So no, wait, that was a dirty word. Never mind. The point of AI in our world is predictions matter. You know, being able to forecast the future accurately matters in all kinds of ways. A lot of that depends on having a deep analysis of what happened in the past, and that's what AI and machine learning is all about, is having a deep understanding of what's really going on in the past so that you can plot the next point on any given curve. You can predict future credit performance. You can fill in blanks in somebody's email shockingly. I mean, who all uses Gmail and is shocked that you write 2 words of a 9-word sentence and it already knows what the other 7 words are? Sort of frightening. I mean, phone's listening to you right now, as we were just discussing. So AI is an iteration of that. It's just another way of doing that. And as I say, Bitfury's idea was we need to build out a whole bunch of adjacencies, both crypto adjacencies and things that are adjacent to crypto adjacencies, because crypto's here for a set of real reasons. And some of those things are not going to be allowed to exist right now. So perhaps we can make money on interim technologies. And I think AI is probably an example of that. But it all comes back to the idea of what innovations are going to be allowed to exist. And we live in a country right now that you know, is not the kind of free country you thought you grew up in. It's a country where innovation exists at the sufferance of government and the incumbents.
So Greg, I'll ask you one question before I ask the final question to the panel. You work very closely with the Ethereum ecosystem. I'm curious, are you looking outside of that with Rivet, or is there anything kind of on your thought process with that?
Absolutely. You know, Rivet started with Ethereum because we knew it, right? We started off actually as a company called Open Relay. We built the world's first open source 0x order book back before they went a different way and started doing like the liquidity pooling thing, right? Whole thing. So we built this node infrastructure, and then we started with Ethereum. And then we got a connection up to the folks at Ethereum Classic, and we started supporting them. We actually now support you know, the vast majority of traffic to Ethereum Classic network. And we right now, not to reveal too much, but in my pocket is a device that has you know, a staging environment endpoint that points to Polygon, and you'll be able to use.
Is that what you call it?
Yeah. So you'll be able to use Rivet instead of anybody else if you want to on Polygon very soon.
Cool. And the final question, we won't do the one word just given time, but this is real simple. It's something I've been asking VCs, founders for the last 5, 6 years. When does the term block, I mean, when you think about email, 99.9% of the world has no idea how that happens. But when does the term blockchain just go away and it's just the underlying technology? I'll go right down the path here.
When apps start getting traction, you know, you don't care about the internet because you care about the Expedia app. So.
You know, I don't know if it'll ever really go away because we have a new kind of culture now. Memes are fed on memes, right? People are going to laugh at this shit in 20 years for reasons we can't conceive, right? We are going to be the butts of eventually very dated jokes that will then become funny memes again, because that's just what we do now, right? It's the internet. Welcome to Web3, but now you can mint it and sell it. But no, I think there's a lot of reason to be optimistic, though, and I kind of want to leave with this point because we're all in here building something or believing in something enough to give a damn to show up, even when the numbers aren't looking that good, or you know, the builds aren't completing, or whatever it is you're working on isn't quite going right. Like, we have to give hope to the next generation of people, because with all of the corruption, all of the bullshit, the people who are building and who have the confidence to build are going to be the ones that save us from all of this. So we're not here to give them answers or solutions. We're here to give them tools. Like, we aren't fucking King Arthur and the Knights of the Round Table. We're the people who made Excalibur, and we make round tables, you know? Like, that's the kind of thing.
Nice. Robert?
I think it's when companies like AWS end up making it the standard for how data is stored, having it be decentralized. And, you know, I had the privilege earlier in my career to help launch a product called Botox, which became, you know, a category like Kleenex, right? And there's other companies. One of them is one of my companies. 2 of my companies also are in that same category now. And it really comes down to becoming a standard. And then you're right, nobody talks about it. We used to talk about 286 computers and 386 computers and 486 and 586 until nobody gave a shit, right? And I just want it to work. And that's the stage that I think blockchain is no longer a term that we're going to be using every day.
DH, we'll close out with you.
Yes, I'll give you a very simple answer. That will be January 2029.
All right.
Wait,
Put that in your prediction market right now.
Asteroid hits the Earth. It's like, isn't there one? There's like this Apophis asteroid that's supposed to be coming later that year. So who knows? Maybe it's.
Well, I want to say thank you to everybody. Thanks for your time, and enjoy the rest of the conference.
Thank you.